let's take your case for the moment as to the bounce back on the day, Marta. Are people really putting any new money to work, or is this more protecting on the downside?
Well, it is kind of interesting because there has been reports that while we initially saw that big buy the dip movement come back and play in the wake of the Liberation Day, in the wake of April 2nd, we have seen a little bit more of a cautious tone more recently, and that relates to hedging activity and the like. I think when we're taking a look at the environment today and we're thinking about how this tariff environment compares to other periods of uncertainty like COVID, this has something that at least seems to have a little bit more legs to it, a little bit more kind of prolonged uncertainty. And I think that can at least shake some of the weak buyers off that decision tree in the sense that they're not necessarily going to move necessarily as quickly as they had into this market. But on the positive side, I think we are seeing valuations improve. And so that would suggest to me that while we could see uncertainty persist for a while, at least there's a bit more margin of safety baked into prices.
We were showing at the top of the program Tesla's year-to-date performance, Amazon's year-to-date performance. It sounds like you're a bit more comfortable with where things sit from a valuation perspective, at least, even if the leaders of those companies can't quantify for us or tell us what's going to happen next with tariffs.
Well, you're bringing up that juxtaposition where we're looking to earnings and to management to give us certainty, but they might not have it at these early days when we're looking at this tariff war. And yet at the same time, prices are pulling back and giving us that margin of safety. So, if we're looking at the start of the year, December 2024, those valuations for the market at large and technology in particular, the Mag 7, were very, very stretched. In fact, if you're looking at it on a historical basis, they're in the 9th or 10th decile of their own histories. And yet, as we roll forward to today and we look at the impact from DeepSeek and the sell-off we saw in January, February, and then the continued volatility from tariffs, we're looking at valuations that are a lot more approachable, not necessarily cheap, but more in line with historical levels. So for an investor who has been conservatively positioned, has been on the sidelines, now may be a time to edge in with the understanding that this uncertainty could persist for quite some time.
There has been some certainty voiced by leaders over at AWS trying to push back on this narrative that maybe they're curtailing their leases for data centers. But still, it just builds into this worry about whether AI demand, AI use is really there to the extent we thought. Marta, give us your read on data centers, on the AI trade here.
Well, it's interesting because even before we entered this macroeconomic uncertainty period, we had uncertainty around AI. We saw the big spend, we saw the big numbers, we saw the enthusiasm from the Mag 7, from tech leaders, and yet we were still looking for that return on investment. And that continues today. So it's as though the narrative hasn't really shifted. We're still looking for those sparks, those hopes. And I think we're going to have investors on the edge of their seats as they're looking at earnings this quarter to see if there's any sort of revelation there. But so far, there hasn't been a whole lot of new information. Maybe some green shoots when we look at how some of these companies have been able to monetize on the margin, but still those killer apps and that massive use case across the economy, it continues to remain a little bit further out. So I think this is, yet one more uncertainty that we're going to have to deal with in this quarter and the coming months.
Marta, I keep hearing from leaders in the semiconductor industry that they are highly confident capital expenditures will rise again this year, and they'll rise by more than they did last year. And next year they will rise by more than they do in 2025. But what happens if we get to the key earnings dates this week, next week, and the week after, and there's no guidance issued at all? They just say, we can't give you the information. What would that do for the technology investors' confidence?
Well, it's kind of an interesting question. I think it's a very relevant one because we've already seen that in earnings a bit so far this season. Early in this season, we've seen different companies say, hey, we're going to give you a few different scenarios, or we can't reconfirm our guidance, or we just don't have a great deal of clarity on how the coming months will unfold. And so I think that is a possibility that we have to plan for as investors, that while we're looking for earnings season to provide us that clarity on how tariffs are impacting businesses, we simply might not have it. Liberation Day was was only a few weeks ago. The scale of the tariffs are changing in real time. So it's a very hard time for companies to truly understand how they're going to position and how they might respond to this environment. So I think what a lot of companies would do, I would imagine, especially some of these companies with a longer term orientation when it comes to AI, is they're going to say, hey, we see this long-term massive opportunity that is in front of us. We know there's going to be, kind of the management of it as we deal with macroeconomic uncertainty in the here and now, but we're not going to lose sight of our long-term goal of, what we can do with AI and making it this world-dominant technology. So I think there's going to be some kind of time horizon management that we see with these earnings, but as investors, we might be weathering more volatility without greater information in the here and now.
Does the tech sector weather this uncertainty around Powell better or worse than other industries?
That's a great question. When I think about that added dynamic to the environment that we're in, I think that's something that will affect sectors broadly and affect asset classes broadly. If we have some sort of prolonged deepening uncertainty over the power to replace a Fed chairman and maybe more politicize the Fed. I don't think there's a whole lot of places to hide there. Maybe that's something, some of the enthusiasm around gold, maybe there's some enthusiasm around cash, but when we think about the equity sectors, that seems to be kind of something that kind of blankets the equity sectors broadly in terms of impact.
Oh, Marta, there's been excitement around Bitcoin. Have you been asking or indeed discussing with any of your clients about more exposure into crypto?
It's so interesting. I had a question yesterday about crypto and Bitcoin. I think there's a real enthusiasm for that trade. You were speaking about the numbers a bit earlier here, that decoupling from technology, moving a bit more toward gold. Personally speaking, I find Bitcoin a difficult asset class to necessarily predict its future movements. One of the troubles with cryptocurrency broadly is knowing what that fair value price is, which can help kind of determine overvaluation, undervaluation, future movements. And while there is certainly utility and enthusiasm around it, predicting its behavior is a bit more difficult. Now, maybe conversations around Powell and Truth Social posts give Bitcoin a little bit more of a shiny look when we're thinking about volatility on monetary policy, but I do think that's one of the asset classes that has that unpredictable flavor that makes it a little bit more, difficult to handicap.
What Bitcoin and some areas of the technology industry have in common, for example, the manufacturing of chips or electronics, is that the administration have policies for it, right? They have people that Trump has brought in to be czars. I'm thinking about David Sachs. If you're an investor and you're thinking, which areas or corners of the tech market should I go to? Why don't you just go to the ones that the president keeps talking about?
I mean, that's a great point. If we're thinking about 2025 and what has driven market action in 2025, it's been fiscal policy. It's been what's happening in the Trump administration and what's in favor with the Trump administration and what's out of favor with the Trump administration. To the extent that that is that marginal push for how asset classes behave, then I think there's good reason to have enthusiasm around something like technology, which has, especially from an AI perspective, a lot of Trump administration enthusiasm as to building out the U.S. as a superpower there. And then to your point around crypto and making that a more fairly or friendly regulated area. But the question is that already in the price? Is that enthusiasm already baked in, at least as it comes to crypto?